What's going on, everybody? It's Ryan here, CEO and head quant at happytrader.io. It is Tuesday, December 12th, 2023, and we are going to do a small account two contract backtest using a $2,000 starting balance. So that way we're well within the margin of what most brokers are going to require. And we are just going to be using our exact strategy that you receive, when you subscribe to happytrader.io. And that's going to be your uptrend and downtrend signals along with your buy and sell and your Illuma trend to see kind of what's going on. So you can see, just for example, we're looking at a sideways market and you can see where the uptrend starts here, and then we get a downtrend, an uptrend, and our signals pop before the market moves. So we're just going to load the strategy up, and first thing is first, what we want to do is make sure that our strategy is set to the appropriate time frame. The time frame that I believe is most optimized for the NASDAQ is the 5-minute chart. So this is just based on back testing. Hit the like and subscribe if you want to know what works best for which ticker and all that kind of jazz. So make sure to, especially because we're a brand new company and we just launched. So go ahead and hit that like and subscribe. And what we want to do is make sure that our buy AI signal correlates precisely with our uptrend signal, and then our close buy AI signal is going to correlate directly with our downtrend signal. Now, you're probably thinking, well, signals, like, how do you even set them up? And it's real simple. We just give you a link for happytrader.io. We give you the indicator link, and then you just hit add alert, and you could do once per bar, once per minute. You set your buy, sells, your AI buy and sells, and then that's going to give you your uptrend and downtrend alerts. And then you can get those alerts anywhere you'd like, in app, on your computer, on your phone. If you have the app on the phone, you can also have a sound playing if you just have a speaker somewhere in the house, or just even wherever. You may be in an office space, and you can get email to SMS. So I like to enable all of them. If you're real fancy pantsy and you want to be like us and you want to be quantitative researchers and connect stuff to programs, you can use a webhook URL. So that's how you set your alerts, and then that's how we're going to run our back test. So we're going to go into our strategy tester. First things first, what we're going to do is just make sure that deep back testing is turned on. We'll toggle it off and turn it back on. We're going to set our parameters. So what we want our parameters to look like is a $2,000 starting account. We're going to use two contracts, and we're not going to pyramid, so we're not entering any positions in the same direction successively, right? So the next thing we want to do is just make sure that, let's toggle this back to the 11th, and then we'll put it back to the 12th. Make sure we get a clean generation, double check everything, two contracts, no pyramiding, $2,000 initial capital, and we'll be using the back test and generating the report. So we will do, yep, we are good to go. So let's go ahead and generate the back test, see what we're looking like. Looks pretty good. A little bit of a drawdown in the beginning. You can see that we did take a little slide down, about a $490 drawdown. So it would be beneficial to have extra money in the account. Full disclosure, the more margin you have in a trading account, the less likely you are to get margin called. But with that being said, that's hardly a bad drawdown. We're going to look at the actual chart, make sure that we have our +2, and you can see we do have our two contracts, and then we have our -2 contracts, which ensures that we're getting an accurate back test, right? So we're using TradingView as the charting software. That's also our trading software. And that's going to be what we integrate Tradeovate with. So that's our futures broker. So now that we know that everything is all set up, we can evaluate this back test. So you can see, this is a drawdown. These happen, right? So one way to mitigate these drawdowns is to set your position to delta neutral. So let's say you had a position long, two contracts on the micro, and then it starts to go underwater a little bit. Well, you can hedge it. You can hedge it with put options. You can hedge it by inversing, meaning you could go, let's say, 2 micros long on the MNQ, and you could go maybe 2, 3 micros, maybe 4 on the MES. You have to play with it to see where you want your delta to be. And by delta, that's going to mean the skew of which way you're kind of aligned in your position for the market to move. Now, overall, everything's great. The market itself, if you just put money in an S&P 500 fund, it's like 7 to 10% per annum on average. You can see that we blew that away handily with just a simple long only strategy. You can see that for the entire year of 2023, from January 1st all the way to today, 655 closed trades. If you were to go to a different time frame, it's even less, like a further out time frames, even less trades. So if you're more of a swing trader, which we can just show you, I'll just go out to the 45-minute chart and we'll just do another one here. And you can see, oh, look, we did even better, 791%. And you can see a lot less maintenance on this one, not to mention no drawdown, right? So that's very important, is to kind of, it's either going to be you're day trading and you're taking signals. You don't have to trade signal to signal. It's just really important to know this is something where it's going to work for you regardless of time frame, but you still have to make intelligent trading decisions, right? So hopefully that makes sense. But you can see that out on the 45-minute chart, you get these bigger rips. We're talking going all the way from, roughly 16K to a 340 point move. And you can see on the 45-minute chart, that's just absolutely lovely. We are, however, going to go back to the 5-minute chart, and you can see 791% year to date. Pretty solid. Blows the market away as far as buy and hold, and blows away pretty much every hedge fund out there. So we're going to go back and generate on the 5-minute. That's the way I like to trade. So 463, just doing kind of the basic, just regular old buy long and sell short from uptrend to downtrend. Now, a lot of our traders are not going to be messing with that type of strategy. And, they're just going to take gains when they see gains, right? So like if you get a runner, you're just going to, take the gains, right? So that's just pretty much how that's going to go. Let's get our chart back up here. So we're going to shrink this all the way down. You can see how much the NASDAQ has moved this year, which is absolutely crazy. And then we'll stretch the chart back out. And if we need to look at the chart, we will do so. And you can see that 45-minute back test was just absolutely bonkers. And you can see that today on the 12th of December, we had a nice little buy signal and an uptrend signal right off the open. So that's pretty cool that we had all that. And you can see the buy signals kind of hidden over here. But you can set alerts for all of that stuff with happytrader.io. And let's just find that buy signal. Boom, it's right there behind there. So we'll go back to the strategy tester, and you can see that 463.9%. Great, 655 closed trades. Pretty great for a whole year. I know people who make that many trades in a month, trading options and stuff like that. Don't recommend it. So percent profitable, win rate comes up a lot, comes up in a lot of our other videos. 29.77% profitable. You're thinking, how do we win 1 out of 3 trades and we still have a positive equity curve? You head over again, like I say in other videos, you verify the number of contracts in the back test. We've already verified that the actual back test is lined up correctly with our actual indicator. So we have everything that's going to allow an accurate back test. You can see that the white numbers are going to be our profit numbers. The red are going to be our losing numbers. And you can see that, right off the bat, just by looking at these ones here, you can see the losers are small and then the winners are quite large, right? So that's how you end up with your positive expectancy. And that's why we like to do a little bit of back testing, especially while we're refining strategies. Now, do you need a back tester? Not necessarily, because you're not really going to be trading from uptrend to downtrend. You might see a ripper rally and you might just decide to take profit, right? Like not everybody's going to stay in a move and kind of overextend their stay. Like this huge move right here, like me personally, I probably would have taken the signal after the dip and then probably closed the trade somewhere like around these 2 peaks. And then yeah, the market might have like retraced and I would have thought I was smart until the market went back up again. So that's just to say that this back test, if you're just using it in ultra like automatic, buy sell uptrend downtrend, still going to result in an extremely positive expectancy. Now, something else you can do is you don't have to enter futures contracts directly at the money. You can sell options out of the money, theta decay. Now that's harder to do in a lower VIX environment that we're in now, and by VIX I mean the volatility index, ticker VIX. So, in that type of scenario, you have to watch out. Now, overall, this is a beautiful P&L curve, P&L graph. And we did have some drawdown, right? We had an initial drawdown, and then we had a max drawdown, 95.1%. That's not too great. That's going to lower morale. So, what that brings to light is that when you look at your list of trades, you need to be making sure that your contract size is commensurate with your risk tolerance. So, if you can't handle 2 contracts, go to 1 contract. If you have no business trading futures, go into something like the SPY, going to something like a stock ticker, Apple, trade 1 share. And you can see that if we switch over to, let's just say, Apple, which is, the quintessential stock that everybody's, wanting to look at when they first get into trading, we can just go all the way over to present day, and you can see that our signals seamlessly adapt to that, whether no matter what time frame we're on. So we can be on the 5 minute, we can be on the 45 minute, and you're still going to get really, really nice clean signals. And then if you go to your alerts, you can see, let's go to the little ellipses. You can see that when you hit add alert, it's going to automatically create an alert on Apple for 45 minutes. That's the time frame we're looking on, and that's going to allow us to trade maybe 1 share off of these signals instead of trading, leveraged products, right? So you want to make sure that, it's really important. Your account size is not that big. If you're a newer trader, but you do have a large account, it can go down very quickly. You just have to make sure you're careful about your actual position size. So, especially when we're dealing with something like the micro E-mini NASDAQ futures, I mean, that's a pretty crazy instrument to be trading, right? So, that's what we're going to do is just refresh this. And you just really need to make sure that, you're not getting in and over your head. You need to make sure that just because a back test works out well, that you aren't getting all wrapped up in, you know, trading that exact back test. The saying like prior results, don't indicate future results or whatever it goes. That's going to kind of be the way that it is, right? So we'll go back into our strategy tester, let our strategy reload, and we will go back in and we will put on our deep back testing and make sure we're set up for the 12th. And there's our report with our list of trades. One other thing we can do is go into the performance summary. And this is actually pretty cool. This is where you can see where that 1 out of 3 win rate actually kind of takes hold, transpires, whatever you want to call it. So you can see the gross profit, and sans the gross loss is going to result in the net profit percentage. And that is lovely. But you will see that, like I said, position sizing is extremely important. If you can't, if you're going to win 463% in a year, you have to be aware that there's no free lunch on Wall Street, right? But our signals and happytrader.io are going to help you get an edge on the market, which is what's important. And so it's not win rate like everybody says it is. It's actually just expectancy, right? So you can see that even with a sub 50% win rate, well sub of 50%, we're still outperforming the market on our back test. And again, it's just a simple, get an alert, instantly buy the uptrend, and then sell the downtrend. So that is our small account back test. And if we just go in one more time and you can see the performance summary, let's see what else we have here. Max contracts held too. Yeah, we didn't do any pyramiding. Percent profitable. Average trade. One more thing I want to go. Oh, largest winning trade. Let's go into some of this stuff. Largest winning trade, $1,700. Largest losing trade, $700. So that kind of shows you, right? You can see the average number of bars in the trades and all that stuff, and no margin calls. So margin call, I'm going to ignore that because we did have this little dip in the beginning here. Probably smart to pad the account, but overall 463% on the MNQ. That is our small account back test. Again, my name is Ryan. I'm the CEO and head quant here at happytrader.io. Have a great day and happy trading.